All right, today is 12/6/2015. We're going to take a look at the market indexes in this video and kind of make a little preparation for next week trading and see what are some of the level to monitor in terms of the market indexes and also the respective ETF. First of all, just to look at the economic calendar for the coming week. It doesn't appear to be too busy. I think the key thing to watch is probably the PPI and the retail sales, then also the consumer sentiment. I think those are the key parameters as I see it, that the PPI probably will give us a little hint of what sort of price pressure the producer is facing, and that might give us a hint on potential inflation down the road. But the expectation is not much here on the PPI increase. And then the retail sales, I think that will be a reflection of how the Christmas season, sales is coming along, and in conjunction with the consumer sentiment. So if we get a boost in the consumer sentiment, then most likely probably will give a pump on the retail sales and vice versa. So those are some of the key economic report that I'll be kind of monitoring on the coming Friday. But other than that, we got a Fed speaker here on Monday, and a couple other minor report, the jobless claim. So depending how much of that being offset by I think the recent layoff and people getting off the unemployment roll. So this number is a little iffy. It's all depend. Right? You got people dropping off on the because they come to the end of their unemployment claim, and that push them to the the participation rate in the non-farm the job number report, but then they are no longer being counted. So anyway, that might be a little bit of a market mover there if things are slowing and not much happening. But again, it's the EIA, and I think it's just a continuation of inventory built, and price just gonna be jerk around on the crude oil, and that's more depending on the dollar and the geopolitical thing than anything else on the inventory right now, because on a logical sense, with the the inventory level here, with the crude oil should be much lower than that, the price for the crude oil. But anyway, so that's the little bit of a outlook on what's to pay attention to in terms of the economic report for the coming week. So let's start off and take a look at the Dow Jones Industrial. Got this daily chart here. You can see the Dow Jones has kind of been pushing back up ever since it came down, on this September 29 test of getting dip on try to get down to retest this August low here. Got this pump up and got up to this level here, somewhere around this almost close to 18,000. They got a little pullback. See this on this swing pullback, 618. And then make a little bounce here. So right now we see a slight resistance down here on this trend line. So the key thing to watch is probably this trend line. Would it pose enough resistance to push it back down? And if we break this support, then chances are we probably could see it maybe make its way back down and try to test this trend line, and it might even spook the market a little bit and come back down, and we test this 16,900 area, close to the 17,000. Okay, so but if it able to push above this trend line and get above this 17,977 or close to 18,000, and the this high here, this all-time closing high, could be back in play. And if we look at the 60-minute chart, on an intraday basis, you can see that this resistance here is what we're watching here. So look for that. I wouldn't go chase after the breakout on a swing basis. If breakout, we want to see could it come back down and hold this level here. Right, if we break above this level, we want to see can it hold above this level before maybe take a take a long position to play it up to the all-time high, because unless you already got some swing position set up for playing up to this resistance and potential breakout, I would be basically just wait to see how the price action gonna be after it break this trend line here. Okay, and then we can look at the diamond, the respective ETF. So again, we're essentially looking for this things to get back above this 179.60 pivot high here. Right, so as you can see, there's this trend line here, and there's an inflection point here somewhere around this 174.21, 174.20. So here's the key level. If it breaks this, then we're probably looking at the possibility for this thing to maybe come back and retest this level here. Right, somewhere around this 170. Okay, so that's the diamond, and then let's see on the. Take a look at the S&P 500. Right, on the S&P 500, again similarly to the Dow Jones, it make a push after the sort of a retest of the October low. I mean the August low back in end of September, and then bounce up. Establish, essentially come up to near this pivot high here, and found resistance and pulled back to the 618. Now it's trying to make it back up, and if it could get above this 2116.48, then this all-time closing high 2130.82 will be back in play. So again, we're looking at this trend line. And if we break this trend line, there could easily looking at to come back and retest this 2040 area, and possibly get back down to this 2020. Okay, so on the 60-minute basis, you can see that there's resistance here that we've been watching. So again, similar to the Dow Jones, unless you playing these short-term quick trade or day trade, then you could play these on the price action up to this trend line here, or even play the breakout. But if you want to play a little bit of a swing long, I think the risk and reward might not be there right now. So I would rather wait until this thing break above this level here, and then come back down and retest. So that's why for the spider, essentially that's what I'll be looking at if I don't have a long position set up already, is to wait for a breakout above this pivot, somewhere around 211.17, I mean 211.70, and see could it hold above that level before it's going, play this thing back up to this 213.75, this all-time high, closing high, because right now this 211 could be some sort of resistance here. It could pull some sort of resistance and bang this thing back down to this 205 area, this trend line. Okay, so the support level, we're still looking at this 204 if it encounter resistance to come back down. So the first level of support is this 204, essentially this trend line here. If it breaks this trend line, we're looking at this 202, 202.89 and 202.16, this area here. Okay, so keep an eye on that, and if it fails that to hold that support level, then that'd be another story when the time comes. So for now, essentially just looking at this resistance here, and looking at this 211.64 area. Okay, so and then we go and take a look at the Nasdaq 100. The Nasdaq 100 so made a nice move, coming back up to try to take out the previous high. I still believe that this 48.1635, this all-time high, the tech bubble back in March 2000, this level is going to be taken out. And if we take a look at this little swing, if we're going to break above this 47.40 area, then that would be the next primary target I'll be looking at. And this is also in close proximity to this 127. Let me kind of zoom this in. This 127 at 48.0875 based on this little swing here. So this swing here pulled back 38.2, and then now it's popping back up and try to break above this 47.40. So if we get up about that 47.40, then I'd be looking at this 48.1635 as the primary target there. Okay. And if we go also look at the 60-minute time frame, you can see that it poses resistance here. So kind of keep an eye on this 47.39.75. Right, and here's that trend line looking for the support, and possibly this area here for the next support if it come back down. Okay, so if we also take a look at the Q, right, on the 60-minute, essentially got a little bit of a resistance. I got a little wedge here, a little bit of higher high, but again, we're essentially looking at this particular level here somewhere around this 115.50, 115.60, this 116 here. Okay, so we're basically looking for a break above this trend line here, this resistance here, and see could it hold and push it up to this 120. That's basically the target I'm looking at on this 120. That's near that that tech bubble high here. Okay, and here's the near-term intermediate trend line here posed as a support. If it break this trend line, I'll be looking at to possibly come back down to test this 109 level somewhere around, also in confluence with this 618. Okay, so and finally we're going to take a look at the Russell 2000. The Russell 2000 still try to make it back up above this 1204. Essentially get back up above that and try to catch up with the other major market indexes. It is a little bit of a lagger right now, but it's holding this trend line here. Okay, it came up here, pull back 50%. Now it's bouncing up, so we want to see it to break about this this pivot high here, this 1204 area, and then possibly move back up to this 127 and 141 extension. So essentially up at this pivot level here. Okay, this 1238. And if we take a look at the 60-minute, so we essentially are looking at this, 1204 potential resistance here on this trend line here. So kind of have to keep an eye on that level, and we might get a pushback. And if we get pushback, this trend line support is the key. Okay, and if we take a look at the IWM, okay, on the IWM you can see this 120.07. Okay. So that's basically somewhere around that that level is the potential resistance, and then the 113 is 116.30 here. Okay, so this is the key support level, and if we break this 116.30 30 level, then we're probably looking at for it to come back down and retest this 113. Somewhere around this 113.50 area here, near the 50% Fibonacci retracement. So those are the look of the indexes and the ETF. So the next week might be a little bit quiet, but as the FOMC meeting approaches, gotta be careful as the market try to position itself for potential rate hike, and everybody is going to be guessing there. Okay, so good luck.